Hello, everybody. This is Sunko, the Korean Bureau. Today is 2024, February 1st. Time flies indeed. It's already 2024 in February. I remember the day when 2024 started, and it's already um, first day of February. Okay, let's get it started and read articles about what's going on in stock market. Okay. Hmm. Now, first things first, what do we have? Billionaire investor Stan Druckmiller has 38% of his portfolio in three growth stocks. One of them may surprise you. So, what is one that's gonna surprise me? Hmm. Okay, this guy recommends a coupon. Okay, let's see. Stan Druckmiller, second largest position in coupon. Owner follows South Korean retailer down 70%. The stock is looking cheap now at current levels. Stanley Druckmiller bets on themes. Well, he does a lot of other things, but when he invests in individual stocks, he typically buys because of a multi-year scale secular theme. He can't pay to listen to the legendary investor and former right-hand man to George Soros too, as he put up phenomenal stock returns over a long out. In the 30 years of running outside money for Dickens Capital Management, he has averaged a 30% annual return while never having a down year. So, according to CNBC, Druckenmiller became an investor in coupon years before he went public in 2021. Since the debut on the public market, Druckenmiller has held on to most of his position, indicating he's still bullish on his stock after all these years. Okay. Mm. So, what has them so bullish? I think a few things. First, the company is operating in a fast growing sector, online shopping in South Korea. Coupon's revenue has gone from essentially zero 10 years ago to over $20 billion today. It's rapidly gaining market share in its home country with a long runway for reinvestment ahead. So the Korean convenience market is approximately $500 billion. If Coupang keeps hmm, gaining market share in e-commerce, while more and more shoppers shift from in-person to online shopping, the company still has many years left to grow. The second, the company has a fantastic founder running the business named Bon Soo Kim. Kim started Coupang and still runs the business as CEO today, overseeing its domination of the South Korean market. Founder-led businesses have been shown to outperform the average stock. Investors should want Bon Soo Kim to stick around at Coupang for many, many years. Okay. Upturn. Uh, okay. Hmm, United Health Group and Visa, Costco's persistent growth. Amgen, AT&T is Amgen stock a buy now? Over a new lift. What is Amgen exactly? The biotech has an excellent track record, but that isn't enough to make its share attractive. The biotech industry has been in slump over the past 2 years, but Amgen has performed comparatively well. That's not to say this leading drug maker hasn't had its shares of issues. They have struggled with stiff competition for some of its products and slow revenue growth. However, the market has faith in Amgen, as evidenced by rising stock price. Is this faith justified? Let's determine whether buying shares of biotech gains John is worth it. So biotech John. hmm, I'm looking at the list of trending news today, and I don't find any interesting articles today. So I'd rather just type something that I wanna look for. Okay, because all of the articles listed are none of my interest, and let's first start with Alphabet. Okay, because just 2 days ago and last night, we had mm, um not bullish trend, but like bearish trend. Alphabet here, and you know what? Let's see what interesting news we have on yahoofinance.com. Because most likely here we have news about uh, stock market in general, whereas in Malifu.com we have like the news about individual stock, like individual companies, like the information about companies. But like like in Yahoo Finance, we have uh, news about market in general. So okay, here we have stock bounce after Fed day sell off with tech bonanza on trap. Um, okay, let's see. Powell would like investors treat good news as good news. Morning breath. Okay, the Federal Reserve left interest rate unchanged on Wednesday, and Fed Chair Jerome Powell brushed off suggestions the central bank will start cutting rates in March. But the Fed chair has also tried to hammer home the notion that good economic data remains good news for a central bank and disabuse investors of the idea that a period of bad news is good news. It will require for the central bank to proceed with lower interest rates this year. So I think we look at stronger growth. We don't look at it as a problem, Power said. At this point, we want to see strong growth. We want to see a strong labor market. We're not looking for a weaker labor market. We're looking for inflation to continue to come down as it has been coming down for the last 6 months. But that a continued economic expansion is something to be feared is a view Power hopes to put to rest in 2024. Whether he'll gain the trust of investors and the public on this count remains to be seen. So here we have U.S. stocks opened higher on Thursday after the worst sell-off in the months on Wall Street as investors recalibrated their timeline for rate cuts from the Federal Reserve and prepared for a heavy hitting round of mega cap tech earnings. And the benchmark S&P 500 rose 0.4%, while the blue chip Dow Jones Industrial Average gained 0.2%. The tech-heavy Nasdaq Composite, which suffered the more than 2%, declined Wednesday, opened higher by about 0.6%. The financial world is moving fast and furious this week, but the Fed remained the focus Thursday morning. Fed Chair Jerome Powell, while cementing a pivot in the central bank's rate plans, gave investors looking for quick interest rate cuts a wake-up call. He hinted that he views it unlikely that the bank would begin to cut rates at the Fed's next meeting in March, Sunday was viewed largely as a toss-up earlier this week. Indeed, according to the CME Fed Watch tool, investors were pricing about a two-third chance of another hold at the March meeting. Well, almost all bets are on small or larger Kakame. So Alphabet, this is an the next article that I'm going to read is about an article about what stocks you have to buy, and this guy lists Alphabet as the one of the stocks that you have to buy. Alphabet is a wide-ranging company. It has multiple AI investments, a cloud computing division, and other properties like YouTube. But at the end of the day, Alphabet is primarily an advertising company, with nearly 80% of its revenue coming from ads. The ad market must stay strong. It shows signs of strength in the third quarter, with ad revenue rising 9.5%, a significant improvement compared to recent quarters. Advertising market strength is expected to persist throughout the year as the economy shrugs off recession expectations. This is part of why analysts expect 11% revenue growth and 26% earnings growth in 2024. As a result, the stock trades for a reasonable 23 times for earnings, reasonable at least when compared to other big tech stocks. Alphabet's main business is in a recovery mode, and with the upside of AI, it could be a strong year for the third largest company in the US markets. Well, people keep saying that Alphabet is a bargain. Hmm. Okay, let's read this one. Okay. Oh, Alphabet stocks bargaining the Magnificent Seven, says analyst. Alphabet stock was dropping Wednesday after investors digested disappointing fourth quarter advertising revenue, but analysts remains bullish on the company's artificial intelligence opportunities and valuation. Shares of Google parent Alphabet were falling 6.8% Wednesday to $141.24, which will be their largest percentage decline since 2020, October 25th. According to Dow Jones market data, the Nasdaq Composite was down 1.2%, even though the tech giant posted fourth quarter earnings and revenue that beat Wall Street expectations. Advertising sales missed the consensus call. Although Gen AI tools across search and ads should be tailwinds to growth, fourth quarter results suggest that search growth likely continues to decelerate despite a strengthening overall ad environment. We'll be watching whether newer Gen AI ads to improve Google search revenue trajectory. City analyst Ronald Josie wrote Wednesday. Josie increased his price target on the stock to $168 from $153 and maintained his buy rating given improving trends across Google Cloud, YouTube, and subscriptions as the broader advertising environment continues to strengthen. Despite the results, just weren't good enough to impress investors. Wall Street analysts remain mostly bullish on the stock. Of the 59 analysts who cover Alphabet stock, 48 have buy ratings and 11 are at hold, according to FactSet, which records no sell ratings. Guggenheim Securities analyst Michael Morris increased his price target to $170 from $150 and maintained his buy rating. Morris wrote in Search note that valuation on forward earnings is a discount to Med's seven peers, a bargain in our opinion given multiple consumer and enterprise growth opportunities for the business. Alphabet is a member of the Med 7, a group of tech-focused stocks. The others include Amazon.com, Apple Meta Platforms, Microsoft, Nvidia, and Tesla. The group is known for mostly outperforming the market and for the large market capitalization of its constituents. Alphabet shares currently trade at 22.3 times for earnings, while those of Apple trade at 27.8 times for earnings, Nvidia at 29.8 times, and Tesla at 59.2 times. Hmm. The excitement for the future of AI has not waned. Troy security analyst Yusuf Skoy wrote after Alphabet's earnings report that the company remains at the forefront of the AI race, which should help drive sustainable double-digit growth in both the top and bottom lines. He raised Alphabet stock at buy rate of $158 price target. Google announced the launch Gemini in December, the company's most advanced AI software model to date. Other tech stocks were dropping Wednesday. Microsoft stock was down 0.9%. Apple stock was off 1.3%. And Amazon stock was dropping 1.2%. Hmm. Okay. Hmm. Okay, Apple's earnings are soon. Pay attention to the iPhone sales outlook. So, Apple, Amazon, and Facebook parent Meta report earnings follow the latest newsroom and analysis of today's results from big tech firms. So Apple is getting ready to report what could be its fifth straight quarter without any revenue growth. So expect investors focus for investors to be on the company's outlook for the March quarter, particularly for iPhones. The company will report financial results for its first fiscal quarters on Thursday after the market close. For the quarter ended in December, Apple had told investors to expect revenue to be about flat with a year ago. Wall Street consensus as tracked by FactSet calls for revenue of $111.7 billion, which would actually be up a fraction from $117.2 billion by product line. Um, Tesla stock reverses as Elon Musk loses $56 billion pay plan. So okay, how to invest like Roku stock is trading around 20% off its okay Tesla. Hmm. Okay, let's see. Hmm. There's still my bullish thesis on NVIDIA down to coincidence. It will be this. The NVIDIA stock that has benefited the most from the artificial intelligence revolution so far. And there's very reasons to think it will continue to do so for a long time to come. The speed and scale of the adoption can be challenging to grasp. So let's review a couple of graphics that may help. Let's start with a tweet from a visual capitalist. That shows where we are. And when it comes to AI's innovation cycle, so in short, experts think AI is just getting off the ground, perhaps only 10% to 25% of the way to its full potential. That will put it in a similar position to where the internet stood in 1995 or where smartphone adoption was in 2007, understood by most people, but still a long way from where it will end up. Crucially for investors, there remains a time to find the companies that will benefit from the AI revolution and add them to portfolios. So, whenever there is a new technological innovation, it takes time to determine how big the wave will be and which companies will be benefit the most. Clearly, Nvidia is one of the companies that will massively benefit from the AI revolution. Uh, okay, here it is. Mm, That's what gives AI the ability to know things. Without massive numbers of the GPUs that NVIDIA produces, AI algorithm would learn more slowly and be far less smart. So, NVIDIA investors should remember at least one thing. Moving forward, a relatively modest investment made at the start of a key innovation cycle can help set you up an individual investor for life if they're willing to buy and hold. Okay, we don't have that many interesting articles tonight. Uh, I think it's because recently, for the past 2 or a couple of days, I've been doing YouTube continuously, and that let me read most of the articles. Mm. It's okay. Anyway, this is it for tonight. And it's 12. Uh, it's now February 2nd, and see you. And tonight, see you. Good night, and happy night. Okay. Bye, and everybody. Bye bye.